2020 has seen the rise of the retail investor, and now Goldman Sachs, the firm known for catering to the rich, is preparing to offer wealth management for the masses. CNBC.com's Hugh Sun has the details. Mike Santoli also here to discuss this one. Hugh, what have you learned about what this initiative is and what Goldman's goal is?
Hey, Sarah. So we got our hands exclusively on an internal memo that basically invited Goldman employees to take part in this, sort of the employee beta test. And they're charging 15 basis points. So it's relatively cheap. And you can start with as little as $1,000. So, they stay away from the word robo-advisor. They think Goldman feels like it undercuts, the human minds that, some of the human intelligence that goes into creating these portfolios. But it essentially is a robo-advised product.
Mike, look, I get this is another step for Goldman, but it's not exactly groundbreaking in terms of Goldman's had its eye on the so-called every man and every woman for a while now, whether it was the Apple Card or personal loans or savings accounts. This is just another move in that vision, it seems to me.
For sure, yeah. Certainly mostly on the lending side as opposed to the investing side, extended the brand into markets. It seems the evolution somewhat had to do with post-global financial crisis, when all the big traditional investment banks were forced to become bank holding companies, with all that involved, good and bad. You have the infrastructure here with all of the data, all of the investment models, and why not essentially just, roll out a broader suite of services, probably with the perception it does less to dilute whatever brand value there still remains in the very, very high-end wealth management business. I don't think there's a sense anymore out there that if you're a client, a very high-touch client of Goldman Sachs, or, for that matter, Morgan Stanley or anybody else, that somehow you're less likely to stay with that firm simply because they also have this automated software-based, investment product. So I do think it's a recognition of the way the world has moved.
What do you think is at stake here, Hugh, for Goldman Sachs in this pivot toward more mainstream investors?
Yeah, there's a couple things. So, previously the private wealth management group really catered to people who are in the ultra high net worth category. That's 25 million and up. And so, recently last year they bought something in RIA that's called United Capital for I call single digit millionaires, 1 to 5 million. And so they really have to build out the mass affluent. Clearly, everybody is really hunting for the mass affluent because it's now that you have the algorithms and the computer technology that can do this cheaply, it's now a scale play. So number one, it's a scale play for Goldman. Obviously, they need to broaden their customer base. And number two, they also view it as potentially a pipeline for future clients of the more white glove, parts of their business and wealth management. And what you've seen certainly with Morgan Stanley, obviously a hugely different, scale of business, is that investors really like to assign a higher sort of multiple to these, annuity-like businesses. Don't take a lot of capital, make money in up and down markets. And this is really ultimately where they want to get scaling.
Thank you, Hugh. You can read more on Hugh's story as well. You can go to CNBC.com and get all the details there.
Shepard Smith here. Thanks for watching CNBC on YouTube.